Hi, I'm Peter Rose, founder of Longwood Currency Trading. I had a communication email from one of my subscribers asking me why I had got out of real estate and did everything in the currency markets, when what they're seeing is all of these guys that are driving around in their Lambos and stuff. They're doing the currencies, but then they're investing in real estate. Why would I get out of real estate? Well, I'll tell you why. It's interesting. About 10 years ago, I saw the massive change coming in the real estate market as far as regulation, deference for the tenant as opposed to the landlord, and a whole host of other things. I'm not going to try to educate you on the real estate market, but I said, on the next time this thing rises, I'm going to sell into that market, and I'll take my money and go into currencies. In the currency market, I don't have to depend on anyone else for my own success. I'm a success or I'm a failure because of my efforts, and not because I have to depend on some tenant paying my rent, some vendor coming on time to correctly fix the furnace in one of my properties, somebody not trying to cheat me on the cost of a new roof or painting, or tenant not just saying, I'm not going to pay my rent, fuck you, chase me in court for 6 months, which I've had that happen. When you're 30 years old or 40 years old, you deal with those problems as part of life. When you get older, you're less tolerant to that. In real estate, I'm the ugly landlord because I'm making money off you. Well, if you don't like renting, why don't you go buy a place? Well, we can't afford to buy a place because we're too busy buying $400 Coach bags and leasing a Lexus for $400 a month. Come on! That's my problem? I was a prick as a landlord. It was my money. $100,000 invested in this building, and you're going to bitch at me because you're paying $1,500 a month, and I'm paying the heat? In currencies, I don't have to worry about any of that. I make the decisions. I put my money on the line. If I lose, it's my fault. Not your fault. It's my fault. And I got to figure out why I made that mistake, because if I make it again, I'm going to lose money again. Now, as I've said in other videos, there's 3 different areas of trading that I think folks trade to get into at some point. The first, well, there's 4. The first is to learn to craft, which nobody seems, that I talk to, even the traders that have been trading for a while, really understand what trading is. They think trading is based on this fallacy of level of indicators. They never go below that to really understand trading. I understand trading because I traded real estate for 40 years, okay? I understand that. And I get long-term trading, and I get short-term stuff as well. But regardless of all that, the purpose that you are getting involved in the currency market, or basically any of the other financial vehicles, stocks, options, commodities, old tires, whatever it is that you're trading, yes, there's that you got to learn the skill first. Whether you do that successfully or not, that's not my problem. But there are 3 levels that you go to try to achieve in your trading. The first level is you just want to pay your light bill. If you can pay your light bill, because most folks don't have 6-figure accounts like I do, and you may never have a 6-figure account, but you can have enough money, you can find enough money. Look, if you can spend $400 a month leasing a Lexus, or you're going out to dinner 3 times a week because you don't want to cook, or you have the gardener come by to cut your grass, or whatever it is that you're doing. Don't tell me you can't come up with $30,000 or $40,000. To trade stocks, you need a minimum of $25,000 to get in that game. That's the rule. And you only get 50% leverage to get into real estate. You think you're going to get into real estate today for anything under about $100,000? You're not, unless you're buying a mobile home in a park. But if you're trying to pay your light bill, you're not going to do it on 3 minis. You're probably not going to be able to do it on $10,000 or to trade in one full lot. I mean, I use $10,000 per full lot. That's just what I do. If the margin is $5,000, that means you can open a full lot position and trade it. If it goes below $5,000, you can't do a full lot. You got to trade minis, right? So you go in with $5,500. It gives you $500 of runway. That's 50 pips. You lose 50 pips, you're done. That's why I trade $10,000 per full lot, because many of the majors right now are $6,500, $7,000, between $5,500 and $7,300 of margin requirement. And so that leaves you, anywhere from, I don't know, for $3,000 or $4,000, which is 300 or 400 pips per lot to lose. So you're not going to lose that, but it's great buffer, and you trade unafraid then. That's just what I do. Okay, so if I'm going to trade 10 lots, I got $100,000 to back that. Do I need 100,000? No, I can probably do it with 60. Well, why don't you trade 40 lots? Well, because it's called risk management. And again, I want to be in a position where I'm not trading fearfully. And so don't think that you're going to pay your light bill, that first step, on a $3,000 account, and probably not even a $10,000 account, because electric bill, let's say your electric bill's a couple $100 a month. Most places, most big cities, that's probably what it's going to average out to, particularly if you're in a hot area where you're running your AC. That's the most expensive appliance there is to run an AC. So if you're running an AC and you're spending $400 a month, move somewhere else where it's going to cost you $150 a month, and then you'll have enough money in a year to trade a $10,000 account, or trade one full lot, or two full lots. I don't think you're going to pay your light bill unless you get $20,000 account, or trade two full lots. I mean, Jesus, you guys, a lot of you are listening to my videos, and you're overseas where you have access to 200 to 1 leverage. And if you're taking advantage of that and using that, that's not trading, that's gambling. Why don't you'd be safer to learn how to throw pass line craps. That's the best odds you get in the casino, is pass line craps. I think it's 1.34% against you. Play all day and lose 1.34% of the money that you're trading. So you're trading $10 chips. The dice get thrown 60 times an hour, so you're in there for 30 throws. You're in there for $300, and you're going to lose $3. Okay, it's cheap entertainment. But don't trade currencies at 200 to 1 leverage, because you're going to lose your account. I guarantee you will lose your account. 90% of the traders lose 90% of their money. There's 2 reasons for that. Number 1, because the education that's out there, and number 2 is because the education leads you to mimicking what some of these guys are telling you to do, which is to trade 200 to 1 leverage. You got guys out there that got $10,000 account, and they're trading 20 full lots, $10,000 account. Come on, please. You got to be out of your mind. Look, you want to pay your light bill, you got to have enough money behind you so that on a consistent basis, because sometimes you're going to lose 20 or 30 pips. And other times, hopefully more times, you're going to win 20 or 30 pips. So if you've got a 60-40 win-loss ratio, you do the math as to how much you can set your stop and lose, or you do something stupid, and how many times you lose at 60-40 versus how many times you win. How much do you need to make over that in order to be in not only the black after 10 throws of the dice, but to divide that number by 10 and say, oh, on a per trade basis, I'm doing pretty good. that's some of the math that I do with folks that are talking to me, and they send me an email, oh, I want you to help me, I want you to help me trade, and I have a questionnaire I send out to make sure the person is serious. If you're not going to take the time to fill out the questionnaire, why the fuck would I spend my time to talk to you? So we work on this questionnaire, we get it back, there's about 20 questions, and I set up a video chat with the person, and we talk about stuff, and they just don't believe it. Well, there's no way I can come up with $20,000. Well, yeah, there is. There really is. But you're not going to trade 2, 3 full lots or 4 full lots or whatever it is that you are trying to do to pay your light bill or to replace your job income or at least significantly reduce the amount of job income that you have. You got to have money to do that. So I can teach you how to do that, not through trading. Trading is part of it. You compound your profits. But the problem is when you have a small account, you're not supposed to be trading for the money. You're supposed to be trading to learn your craft so that when you get money and you put it in there, you can then pay that light bill. And once you have the confidence to pay that light bill, then you can go on and replace your job income or significantly impact that so you don't have to worry about your job. And then you can do the third step, which is what I'm trying to do, is replicate what I did in real estate, which is to make $1 million. Am I going to be successful in doing that? Well, I don't know. I'm 73 years old. But I hope it doesn't. I mean, you could say, well, you've been doing the currency market since 2007 and, had a first live account since 2012. What the fuck are you holding up for? Well, I didn't sell my last real estate property until, what was it, 2020, I guess, 2019. So I was still involved in real estate, and that was my focus. Protecting a $500,000 or $600,000 building and managing that rather than sitting in front of the screen and trying to transition my focus to that. But regardless of that, why not set the goal to make $1 million or $500,000 or whatever you think you would need in order to safely pull 4% of that a year so that would help you live. That's the 4% rule, right? Those of us who are in 401ks or IRAs or whatever your tax-deferred savings plan is in the country that you're in, the rule is don't take more than 4% of that out on a yearly basis, because over the long run, the 20-year pull or 30-year pull that you're going to be retired, as that money is continuing to grow, you're hoping that money is going to grow, like the U.S. stock market or real estate or whatever is growing about 8% on average a year, and so you can say, well, okay, I'll project those investments to grow at 6%, and if I pull 4% out, a small amount, 4% out, but the balance is growing at 6%, there's many scenarios where you end up with more money when you die than you took out. So what good is that? But anyway, that's the safe way to do it. And if you don't have a whole lot of money in there, you have to really do that. Keep it at 4%. So if you're making $30,000 a year, how much money do you need in your savings account to pull 4% a year out in order to make that $30,000? You do the math, okay? And so you got to do the same kind of math when you're looking at wanting to pay your light bill, looking to replace your job income or significantly impact that value, or then, well, what do I need to do in order to get to $1 million? At some point during the process of growth in your currency account, you're going to be able to say with some amount of comfort, gee, even in my worst year, I'll make 30% on my account. And that's not, I'm not telling you can make 30% on your account, but I don't see any reason why, if you don't have really good risk management and not doing 200 to 1, just doing the standard no more than 50 to 1 leverage, that you can't do 70, 80% a year on your account. But you do have to have vigorous risk control. Last year, I was 90% up on my risk. I went to shoot the potatoes and pushed it all to the center of the table at the end of the year, and it just went awful for me. And I've got videos back there, and so rather than a 90% win against my risk, I'm up probably about 30% or 35% against risk, which is really good, and it's fine, but I really took that big hit. But when you have a lot of money and you're trying to make $1 million, you look for those opportunities where you think, you believe, you trust, and you shove it all to the center of the table. And sometimes you're going to get it wrong. That's what you do when you're playing poker, particularly no-limit poker, right? At some point you think, I got this, and you shove it all in the middle, and you lose it. Does that make you an asshole? No, you made the wrong choice. You got to step back up to the table, and you got to play the next hand. And so it's a different mindset in trying to make $1 million. If you have a lot of money in your account, you should not be trying just to make your job income. Why would you have a tremendous amount of money so that you could make 5% a year on that money, and that would pay for your job income? Why would you do that? Why would you do, particularly in currencies where the opportunity is so great? If you have a huge account, you should be putting it to work for you. If you have a small account, you should be putting it to work for you. And I'm not talking about minis and 2 full lots or 3 full lots. You get up into the point where you're talking about compounding, staging, negative staging, all kinds of the sophisticated advanced techniques that are available to you when you have enough money to start the staging process and build accounts. You build your account, you build your position, and then you stage into it. I've got videos on that as to how things and concerns that you have to concern yourself with. But when you have a lot of money, 6 figures, a couple $100,000 maybe, you work with a small percentage of that, which is going to kick you off a good replacement, let's say, to your job income, or a support to that income, so that you've constantly got that money coming in. But you look for the big opportunity, and when the big opportunity comes, you go and you push it to the center of the table. If you get it wrong, you're going to get hurt. But if you have enough money and you know how to manage all that, I got hurt really bad last year. Really bad. But I've still got a lot of money in the account because I didn't let it go that bad. Now, I'm starting out a new year. I could go underwater and I could do stuff early in the year before I have a chance to make money, and then I could go negative, and I'll be scrambling and trying to make that back. But I know how to do that. I did it a couple of times. I can do it here. I did it in real estate. I can do it here. Those are different things that you're looking for. And everybody's going to say, oh, I want to go into real estate because I want to be a millionaire. Well, you want to go into currency trading because you want to be a millionaire. Quit dogging around about it. That's what you want to do. But first you got to pay your light bill. And then enough money to replace your job income, and then you can talk about the $1 million. What are you going to be able to do with that money that's better than trading currencies? Why would you take a significant amount of that money out to buy a problem, which is called real estate? Why would you do that? Why are these currency traders that supposedly have a lot of money buying real estate? They're talking about diversification of their assets. No. They're diversifying their risk because they're not that confident that they can trade the currency market to continue to make money, because they're trading at too high of a leverage. They really don't know what they're doing. Most of them get there just out of pure luck at 200 to 1, and then they become fearful. Oh, I don't want to lose this money because I don't know how to make it grow. And so these stupid rules, I'm not going to risk more than 0.25% of my account, or 1%, or whatever. It's stupid. It's stupid. That's not the person that you want to listen to. If you've got enough money that you say, man, if I push this to the center of the table, I could make a significant chunk, and then within a year or 3 years, I could run those numbers and end up with $1 million. Man, you better talk to somebody that really knows what they're doing about trading, because if you get in and you start doing that the wrong way, the way that you're going to see that most of the education that's out there, you're either not going to make it or you're going to flatline your account. That's just the unfortunate truth of it. So the reason, I hope, that I got out of real estate and moved to currencies is clear. And no, even if I was 40 years old, I would not be diversifying my assets by taking currency trading profits and buying a friggin' piece of real estate, unless it was my own house or a condo or something that I was going to live in, or for somebody else who needed it. We've gone into different times than 40 years ago or 45 years ago when I started my real estate career. It was totally different. The small guy could get started. You could build a small portfolio, and you could take that and make it a really large portfolio. I didn't, because I ended up having several buildings and then getting involved in software engineering because I was very interested in that. Well, you know, you're working 45, 55 hours a week doing software engineering. You don't have the bandwidth to do the real estate the way that most people who work normal jobs would have the bandwidth to do the real estate. Well, why would you want to do that in today's environment? Look at the regulatory environments, the building codes, the tenant-landlord law that's involved in your particular state, the price controls on rents that you're involved in, particularly in the United States. It's awful. Andrew Henderson, the Nomad Capitalist, just put out a wonderful video on these problems of the Western countries, that there's just such a litigious society and so regulatory. It's just stupid to even think about getting involved in real estate unless you're buying into some big fund which is controlling several thousand units, and you're just part of that, or you happen to be the big dog and you own several thousand units. You've got that diversification, and you've got skilled teams of people to run off to court every 32 minutes because some asshole isn't paying his rent, or he poked a hole in the wall, or you're not supposed to have pets, and so you got cat urine all over your apartment. You got folks to take care of that, and then you could sit there in your floater in your great big pool out back, and you can have a good life. And real estate, that is really good, and it's simple. Oh, why don't you get into it as the little guy? You're going to get crushed because of the regulatory requirements. If you're overseas, that might not be the case. But why bother with the aggravation anyway? You got to fix the roof. The tenant gets drunk and locks himself out of the apartment. You got to get up at 2 o'clock in the morning. Oh, you're going to charge him $100 to come down to unlock the door, like I used to do. Pretty soon I got tired of that. I said, "Fuck you! I can open the door. Call a locksmith." You just get to a point where you just get tired of it. Why would you do that when you can sit down at the trading desk and make decisions that can make daily income, job replacement income, in a couple hours of your time? Why wouldn't you make that choice? Well, you might not have the confidence to make that choice if you're listening to a lot of these fools and you're trying to replicate what they're doing, and you find that you can't do that. Of course you can't do that, because they're trying to teach you what they do instead of what trading is all about. Figure out what trading is all about before you make the decision as to what vehicle you want to choose for your wealth enhancement or your job replacement income process that you're desiring to have. Thanks for watching. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.